Hey everyone, welcome back to the Uses of Money mini-series here at AWM Capital. My name is Josh McAlister. We're going to talk about the first use of money today. It's probably going to make you cringe, and you're probably just going to say like, oh, that's my accountant's responsibility, but taxes. You've heard the old saying, there's two things that are certain in life, death and taxes. And all too often, we just reduce taxes to be something that like, oh, hey, at the end of the year, when I've gotten all my documents that I get in the mail that I don't understand, but I just flip them over to TurboTax or to my accountant or whoever does my taxes, and I hope I get a refund at the end of the day, that's kind of like my barometer of success. I evaluate my CPA based on the amount of money that I could get back when I file my taxes. And I'm just going to take a little bit of time to debunk that and then talk about a strategy that all should implement to be able to effectively plan for their tax cash outflow. Let's talk refund versus payment. We sit there and we get really excited when we get a refund, and that's all well and good. And yeah, cash coming into your bank account, that's exciting. The problem is that a refund is actually you getting returned your money that you've lent to the government at a 0% interest rate. They've been able to hold on to your money throughout the year that has been withheld from your paychecks because you overpaid through those paychecks on the amount of cash that you owe. And so thus you get a refund when you actually go to file your taxes because the government then says, oh, you've paid us too much, here you go. Well, how do we actually limit that and let your money work for you? And it's called a tax projection as opposed to a tax return. We run a tax projection every year, multiple tax projections really, for all of our clients. And I would argue that this really pertains to everyone because your money matters. Your cash matters for you to be able to achieve the outcomes you desire. So let's pay the minimum we have to throughout the year to the federal government so that you can utilize that cash as you see fit. Now, we don't want to do things in an illegal way or incur penalties and interest, and that's your advisor's responsibility to understand those rules. But if you don't have clarity on what taxes you are going to pay when you set up your annual financial plan at the beginning of the year, you don't have clarity on what you should spend, you don't have clarity on what you should save, and you definitely don't have clarity on what you should give. It all starts with taxes, folks. And at the end of the day, we don't need to evaluate the success of our accountant or whoever prepares our taxes based on what they give us in return. We need to look at how we can minimize taxes effectively going into the future. And that's looking at stuff on an everyday basis during the tax calendar year so that you're not sitting there at the end of the year when you're filing your taxes, and that's just a regurgitation of everything that's already happened. You have no control over that. My challenge to you is to sit there and actually know what taxes you're going to pay for 2021. Sit there and take the time to understand the largest cash outflow of the four uses of money, and therefore you'll be able to really be able to maximize the three other uses of money, which are more important to you.